There's been a lot of talk recently about mortgage stress. Almost 1 million Australian households are on the edge of mortgage default. Around the country, people are overwhelmed and feeling the effects of financial stress as they fall behind on payments and struggle to keep up. Over the past 20 years, I've worked with thousands of families and individuals who have faced mortgage default and lost their way trying to navigate rising interest rates and household bills. I've seen the impacts financial stress has on people's lives, from relationship breakdown to loss of homes and possessions. The ramifications can be serious. With interest rates likely to rise in the coming months, now is the time to take steps to prepare yourself and your family from falling into the trap of financial stress. My first piece of advice for anyone facing mortgage default is don't put your head in the sand. It's important to act quickly. Lenders often issue default notices after mortgage payments have been missed for 3 consecutive months. Secondly, speak to your bank as soon as you realise you're going to have trouble meeting a repayment. Work with your bank to negotiate a reduced payment plan which you know you can afford. If you don't already have one, create a household budget to work out how much you can afford to pay towards your mortgage and help manage your other expenses. You should also review and prioritise your bills. What are the most important bills to pay first? What are the consequences of not paying a bill? Having your rental TV possessed, for example, has fewer consequences than receiving an eviction notice. Also, keep the lines of communication open with your other creditors. Explain your situation and speak to them about reducing payments. Some may even consider a moratorium, which is a period of time in which you are not required to make any payments while you get back on your feet. Once you have a short-term plan and open communication lines with creditors, a good next step is to consider other options like debt consolidation, but do so carefully. A debt consolidation loan might free up cash in the short term, but could significantly increase your overall expenses in the long term. At MyBudget, we find that about 97% of people we see can pay their way out of debt through budgeting and without taking on more loans. And finally, don't be afraid to ask for advice from people you trust. Many people fail to acknowledge their financial difficulties and their problems snowball. A trusted family member or friend can be a great to confide in, but a professional advisor or financial counsellor will be able to give you practical tips and sound advice to help you get back on track.